Are you making money with your Amazon business? I know you started your business with some specific financial goals, but how do you know and how do you track if you're profitable? You have to plan in advance, and you start with your COGs. Hello, I am Kimberly Locke and welcome to AMZ Unlocked, and this is where we are going to inspire, empower, and educate you on all things Amazon. And today we are breaking down one of the most important things that you need to have in line for your business before you start, and that is knowing that you're going to be profitable. You're starting your business to make money after all. Now, there are a lot of metrics that are thrown about in the space, and there are a lot of people who flash big vanity metrics like huge numbers for their monthly revenue or their annual revenue. And that's all great. Revenue is fantastic. That's how much you're bringing into your business. That's your top line figure. But does that necessarily translate to being profitable? You could be running a 7-figure Amazon business and be losing money. So you know you started your business to make money, just like I started my business to make money, and you need to start with your COGs, and there's a lot of things that go into that. But before we dive into the COGs, I want to go through a few other terms that you may be hearing and making sure that you're clear on what those are and what those mean for your business. So we'll start with revenue. Like I said, that is your top line income. That is the amount of sales that you're basically making every month or every year, however you're reporting it. And like I said, you could be running a 7-figure Amazon business where you're making $1 million in sales, but you could still be losing money. So that is necessarily not the number you need to be focused on when you're looking at the health of your Amazon business. Another term you may be hearing is profit margin, and there is gross profit margin and net profit margin, and those are different. So your gross profit margin is basically your revenue minus your cost of goods. Your net profit margin is going to take into account a lot of the other expenses. And so we're going to look at the cost of goods in a minute, but just for easy numbers' sake, you could have a 50% gross profit margin and still be losing money. You could be sourcing a product that costs $10 to have made and you're selling it for $20. Fantastic. That's a 50% profit margin. But what are all the other costs involved that you need to consider to really get to that net profit margin? Another term you may be hearing is ROI, or return on investment. And that's basically your profit divided by your investment. So in the example we had before, a $10 product selling for $20, if you're going on your gross profit of $10 per unit and you invested $10 in each one, 10 divided by 10 is 1, or 100%. So that means if that is your bottom line, if that's exactly what you have left over after everything, then your ROI is 100%. That means that for every unit you sell, you can buy another one. But you don't want to use your gross profit to make this calculation. You need to get your net profit. That's what you need to figure. So anything less than 100% ROI means that you're basically losing money. You're not going to be able to replace each one of those units you sell and get another one back on the shelf to take its place. That is not a business that is sustainable. Now we're ready to dive into COGs, or cost of goods sold. And this is a very important figure for the health of your business because it is going to have an impact on everything else that we've talked about. It is directly tied to your profit margin, and it is directly tied to your return on investment, which is going to keep your business sustainable if your return on investment is over 100%. So this figure is very important to get right. Now, there are two different types of COGs. So there's just your basic COGs, which people would consider their what they pay the manufacturer. So if the manufacturer is charging you $10 to make whatever widget you're selling, that's your COGs. But there's more involved in getting that widget onto Amazon. You've got a lot of other costs that you have to incur to sell it, and we call that your landed COGs. So that basically means all of the costs involved in getting it manufactured, packaged, and shipped into whatever platform you're selling. If you're selling on Amazon, Shopify, Walmart, whatever, that is the number that you need to know how much it costs you to get it to the point that a customer can buy it. So let's dive into the computer, and we are going to calculate COGs on a spreadsheet from Davan Strategic. Now, I interviewed David and Ryan a while back on the podcast, and I'll put a link in the description below so you can check that out if you haven't seen it yet. They are some very successful Amazon sellers, and they created a suite of spreadsheets that makes it super easy to manage a lot of the numbers associated with your business and make it very easy to stay on top of these numbers. So let's dive in and check out the landed COGS spreadsheet. All right, so we're in the computer in the landed COGS spreadsheet from Davan Strategic, and this is such a powerful tool. I love this. I use this all the time when I am going and placing my orders and doing my product research, and as I led up to making my product decisions. So this is definitely something you want to start using as soon as you're starting to get your costs and figures together to see if something is valid before you even place your order. Now, down here you can see the tabs. I'm in the example tab that has just some prompts to include some different things that you might not have thought of that you might want to include in your cost of goods. Some of them you might determine you want to put in your overhead instead, like these intellectual property costs and your brand creation. You may or may not want to put those into your cost of goods sold. If you have a brand that has multiple products, that might not be something that is applicable in your cost of goods because it's going to be more of an overhead or divided out between all of them. So these are just some ideas to help you get thinking and decide which you want to go with. We've got our landed COGS summary tab at the beginning, and then you can see you can enter this information for up to 5 orders in this spreadsheet. So that is really powerful. So I've already gone ahead and entered in some information, some sample information into our first order tab. So let's take a look at that. So I didn't opt to keep some of those branded and design costs in this. I didn't have the intellectual property either. I just kept this really basic and simple, but that example tab will get you thinking, what things do you need to consider entering into your COGS? So I've included sourcing, I've got my packaging, so you can see I've got product inserts and packaging costs, I've got inspection costs. Now, as you guys know, I am a big advocate of SKUdrop and using that just-in-time shipping. And there's a link below to a podcast that you can listen to learn more about that, and a link to find out more about using those services for your freight forwarding. But that is a system where your products, because mine are manufactured in China, they're stored in a Chinese 3PL instead of in a US 3PL, which is a lot cheaper. And then I just send in a little bit every week based on my sales velocity. So I'm not having too much warehouse storage in Amazon, and I'm getting things there just in time. But what I've done is I've gone and I've calculated what it's going to cost me. And you can come in and adjust this as things change, because your freight costs are going to change from time to time. But I've calculated based on my first shipment how much it was per unit to ship everything to Amazon, and then multiplied it out for the whole order. So these are just made up numbers, but this is what I would do. I would calculate up what it's going to cost you to ship everything once it's all said and done into Amazon, and put that total here, because you want that total amount of your freight forwarding to be able to be distributed into your landed COGS. Otherwise, it won't be accurate. And then over here, I've got other costs like your 3PL costs. If you're paying for your storage in the SKUdrop warehouse in China, or if you're opting for a US 3PL, you're going to have those costs also. And I've put here that these are my costs for 3 months. And again, your costs are going to depend on how much space you're taking up in the warehouse, calculated by cubic foot or cubic meter, depending on if you're in the US or in China or some other country. Now, here I've put in the units ordered for this order and my COGS. Now, this is the manufacturing cost. This is what the manufacturer said is going to cost me for each unit to pay them to get my units manufactured. And you can see here, you've also got places where you can enter additional information about your more detail if you run out of space, and keep that all in one place. Now let's go back over to our summary sheet and really see the power of this spreadsheet in action. So here we are. Any of the fields in blue in a Davan spreadsheet you can change. So you could customize this by putting the name of your product in here. So say I'm going to call this widget. Well, I'm selling widgets. And so I've put that in because you'll want to have one of these spreadsheets for each of your products because the costs are all going to be a little bit different. Now, this is really cool. Here, as you go on and you're placing future orders and you want to go back and review your COGs over time, you can switch this just very simply between orders. So I don't have anything on the second order, so it zeroed everything out there. So we'll go back to our first order. So that's really useful. Now I've put in here the number of sales that I'm estimating I'm going to make each month, and that's based on the sales velocity I've seen on page 1. And you can see here where it's pulled everything in from that tab to calculate the landed costs. So my total landed COGs per unit is $11.91. And if you break out just the landing costs, all the things that are on top of the manufacturing costs, that's your landing costs per unit here. And here's my cost of manufacturing per each unit. And then you can see based on the sales velocity and the price I've put in, it calculates my monthly estimate of revenue and profit, my revenue potential for this order, and my profit potential for this order. And it also gives me a break-even sales price. So at $21.95, I would be just breaking even. And that's before advertising. So that gives you a ballpark. If you get your cost of goods in here and you're playing around with this before you make your decision to place your order, and you know what the products are selling for on page 1, and you know that you're not going to be able to sell it for more than that, then you know it's not going to be profitable and you don't want to move forward. Now, over here, there's some more areas that you need to put information in, like your referral fee percentage. Most products are going to be 15%, but you can go to the Amazon revenue calculator if you have a selling account, and you can put in information there if you don't actually have products, and find a similar product and pull up and see what the fulfillment and the referral fees are going to be. So I'll put the link for that Amazon revenue calculator in the description. If you haven't used it, it's a really cool tool to play around with and find out all the different fees from Amazon before you get started. So I've put in a 15% referral fee, and that's going to change based on what my sales price is. The fulfillment is based on the size of the product and how much they're charging me to fulfill it. So I've put my sales price in of $37.95, and that's telling me that I am making a return on investment before advertising of 134%. So that's really healthy. Now, you have to, though, calculate in your advertising. So I've got my break-even ACOS here. Now that is only, ACOS is only your advertising sales, and that's 42.2%. So I know that my advertising for this could go up to, my ACOS could go up to 42%, and I'll be breaking even. But your tacos is taking into account your organic sales also. Now, you can get this information off of platforms like ZonGuru on the business dashboard. It breaks it down for me, and I can very easily, quickly see what my tacos are. And so I've put in 10%, which is, I would like my tacos to always be 10% or less. And then another figure that I've pulled from the Amazon revenue calculator is my inventory fee per unit. And it will tell you that on that calculator, and that's based on the size of your product. So then we come down here and we've got, this is our bottom line. This is the numbers that we wanted to know. Our profit per unit is $12 based on that sales price. Our profit margin is 32%, which is a good profit margin. And our return on investment is 101%. So that's based on the profit being $12 and the COGs being $11.91. So that's giving me that. So as you can see, this tells you quite quickly, and you can have a play, what's going to happen if you change your figures, if you change your sales price. What's going to happen if it goes down, if you're putting on a coupon, or if your advertising goes up. All of that you can change here. Any of these blue fields you can change and see how it's going to impact your bottom line. So you can see how powerful this is. And even beyond that, like I said, you can compare from order to order how you're improving your cost of goods and how your profit is going up. So you see, it's that simple. The landed COGS spreadsheet from Davan Strategic is a very powerful and easy to use tool. And I just love the way I can monitor my cost of goods for multiple orders in a row, because you'll see as you get into your Amazon business that your COGS are going to change from order to order, and you want to stay on top of that. And it's really cool to be able to compare from one order to the next. Now, if you want to get your hands on this spreadsheet, I have got a link in the description where you can get 15% off of any of the spreadsheets from Davan Strategic. So check that out and start using this spreadsheet to calculate your COGS so you can stay on top of the health of your Amazon business. I hope this has helped demystify how to maintain a profitable and healthy Amazon business and demystify some of the figures and terms that you're hearing related to profit margins and cost of goods and ROI, because it can get really overwhelming when you're starting out, and having a really clear understanding is very important to keeping your business healthy and profitable. Now, if you've gotten value out of this, please hit the like button and please drop a comment. Let me know what you thought. Did you learn anything? Is there anything else that you'd like to know about your Amazon business that I can share with you? Let me know in the comments below, and don't forget to hit the subscribe button and ring the bell so you get notified of upcoming videos like this one.